Welcome to IR Insights Australia, brought to you by Dentons. IR Insights, hosted and featuring members of our National Employment and Safety team and guests, delivers practical guidance and expert analysis on employment law and workplace relations in Australia. This series is designed to help employers stay informed and compliant in a rapidly changing regulatory environment, as well as provide practical strategies to help you manage workforce challenges with confidence. We invite you to send any questions to our dedicated email, irinsights.au@dentons.com. Before we begin, we'd like to share an acknowledgement of country from Auntie Munya Andrews.
Nangamalari, I'm Auntie Manya, and on behalf of Dentons and everyone here today, I would like to recognise the stories, traditions, and living cultures of the land on which we meet. We acknowledge the traditional custodians of this land and their continued connections to land, sea, and community. And we pay our respects to elders past and present. Nangamalari.
Hi everybody, welcome to our IR Insights webinar for today on the fascinating topic of employment law and taxation. And I'm really pleased to be joined by John Hyde Page today, who is a barrister. John practices mainly in commercial law with a particular focus on employment law, insolvency and taxation. He's best known for the backpacker tax litigation in the High Court, in which, as lead counsel for the taxpayer, he overturned a Commonwealth tax. So, interested to hear what the backpacker tax is actually, John. But John, thanks for joining us today, and it's great to talk to you about the topics that we're going to run through in a second.
Well, it's my pleasure to be here. And if you want to talk about the backpacker tax, we can certainly do that.
All right. Well, we might put that as a footnote and we might come back to that. But I know, John, our listeners, many of whom are HR practitioners, are often confronted with the issue of taxation in various different employment scenarios. And we do have a great tax team at Dentons. We have a tax team in our Melbourne office led by Sue Williamson, who's highly regarded in that area. But this is a great opportunity for us to hear from you and your experience and enlighten us about some of the idiosyncratic elements of the crossover between employment and tax. So I wanted to get started if I could. We're going to run through pretty much a Q&A with John of around 10 to 13 questions that I hope covers what people want to hear about. If you've got any thoughts after the presentation, you can always email us through. Our contact details are going to be available wherever you watch or listen to this webinar. So, employee or contractor, John, I wanted to ask you, a lot of businesses struggle to determine whether their workers should be classified as an employee or contractor. And rightfully, there's been a lot of back and forth in the High Court in terms of the test, and then more recently, amendments to the Fair Work Act around, the definition of what an employee is. Misclassification of workers does continue to be a major compliance risk. Would you say that the consequences of misclassification of workers is getting more severe?
I think it's definitely getting more severe. And this is at a time when there isn't a huge amount of extra clarity in the area. I mean, the basic problem is that in some cases it's quite clear that a worker who a business is using is an independent contractor. They'll be an independent business with an independent logo, business premises, all the rest. But it's also possible for somebody to be an independent contractor of a business when they go to that different business that they do not own every day, the same time, sit with the other employees, and all intents and purposes seem to be doing their own thing. So the line can get very blurry. It isn't achieving greater clarity. The reason why it's a problem is that there are all sorts of various penalties and um, imposts that depend on whether or not somebody is an employee or a contractor. A big one relates to withholding tax. As we all know, businesses have to withhold money to the ATO in respect of wages and salaries they pay to employees, but the only circumstance where they need to withhold to the ATO in respect of a contractor is where the contractor doesn't provide them with an ABN. So a very small class of case.
Yeah.
Now, it's very serious when a business is out there deliberately not withholding amounts from wages and salaries to the ATO and doing so deliberately. But it's also possible for a business quite inadvertently to not be withholding to the ATO in respect of wages and salaries because it doesn't know that the relevant person is an employee. And the consequences of getting that wrong are becoming more severe. And a recent development that we saw is that where a business fails to withhold from a wage and salary that it pays to an employee, because it's an independent contractor, the business doesn't actually get a tax deduction for the amount of the remuneration that's being paid to whoever that individual or individuals are. And that's, of course, a massive consequence for any operating business. You can't deduct one of your expenses. And it's entirely possible to stumble into that scenario just because you don't know that a particular worker who you think is an independent contractor, as a matter of law at least, is an employee, and the money they're receiving is not a payment to an external person for services. It's a wage or a salary. So you can lose your deduction, and within the workplace relations space more distinctively, things are becoming harsher. It's now a criminal penalty not to pay workers at the award rate. The awards only apply to employees. They don't apply to independent contractors. So if you get the classification wrong, you can find out that there was an award that applied and that you did not adhere to it because you thought the person was an independent contractor. And I'm not suggesting it's likely if it's an innocent mistake, but it is possible for there to be criminal prosecution. And the penalties for getting that wrong, if there's an underpayment of remuneration, are substantial. They can vary from 3 times the amount of the underpayment to as much as 5 times if it's a corporate entity and a serious case. So,
yeah. And I think it's worth saying there's wage theft laws now that were introduced 1st of January last year, which theoretically, under the Fair Work Act, impose imprisoned sentences for deliberate underpayment of wages, which could relate to the deliberate misclassification of workers. So I think one area of confusion that I think employers often see is there's the ATO test for whether someone's an independent contractor or an employee. And I sometimes see people say, oh, we did an online quiz on the ATO website and they're a contractor. But then there's the industrial legislation and the case law and the High Court case law around who's an employee, who's a contractor. Now there's a definition in the Fair Work Act of what an employee is. Is that more in alignment now between the ATO and the workplace law definition, or are they still a little bit different? Because sometimes the ATO might say one thing, but then workplace laws say another.
Strictly as a matter of law, the two tests are the same. But it's true, the ATO is not the same organisation as the Fair Work Commission, and they can take different views. So if you're able to keep the ATO happy, you may not necessarily be keeping the Fair Work Commission happy. And of course, something that we see quite regularly is people going to the courts after they've been functioning ostensibly as an independent contractor for years, and saying and getting a ruling that says, "Hey, we were an employee all along. Um, we've missed out on these benefits." So,
Yeah. Yeah.
and that's something that happens. I won't say every day, but with some regularity.
Yeah, there's definitely some concerning cases out there. I came across one recently, someone who was allegedly a contractor, had worked for a university since 1975, doing this, and still to this day, doing the same shifts, same hours, like basically they're a part-time employee, but treated as a contractor. So academia, it's a bit of an issue, probably many other industries as well. So I guess with that in mind, what do you say employers can or should do to minimize the consequences of getting this classification wrong?
Mm. Well, um, they say that prevention is the best cure, and that remains true in this particular area of discourse as well. There's a huge amount of merit in uh, as a business engaging with the ATO or engaging with the Fair Work Commission, and even if they're not particularly responsive, sort of saying to them, this is the view we're taking. Is it correct? Um, Anything that shows a sort of good faith attempt to engage with the legal requirements will will be of great benefit to an organisation if down the track, a court or somebody says that they were getting it wrong. I mean, most agencies, most of the time, operate in good faith, and they're not keen to penalise people who are doing their best. It's also true that I think some businesses, at least, miss out on the potential that there is to make more clear in their contracts that they have with their workers whether or not the worker is an employee or an independent contractor. Now, of course, it'll say something about how whether or not it's an employment contract or a service contract, that sort of self-identification in a contract doesn't really help you very much. Um, the courts now say that just because something is proclaimed to be an independent contractor relationship doesn't really mean much. But
Yeah.
there are other sort of substantive provisions you can include, like if you make clear in the contract that the contractor is a person who has latitude in the performance of their work. If you can include provisions that allow them to delegate some of the work, these are all things that sort of help shift you more obviously as a worker into the independent contractor camp. So,
Mm. And I think it's fair to say we sometimes have employers say, "Oh, the person's got an ABN," and they think that in its. I mean, I've got an ABN. I'm not a contractor, but that of itself doesn't establish a contractor relationship. Probably an ACN might be different if they're operating through an incorporated entity. That would help, but still probably not definitive. Um, but I think just also reflecting on what you're saying too, I think something that I would say to listeners as well is if you're unsure about, or if you think maybe you've misclassified some workers incorrectly, probably getting some legal advice and legal privilege around what's happened um, is important, because if you've got someone within the organization who has recklessly or even deliberately misclassified workers, that person, whether it's in HR or legal counsel or CEO, may be exposed now to criminal wage theft um, liability and culpability. And there's all sorts of, criminal sanctions associated with that, not least theoretically prison. No one's gone to prison under the wage theft laws in Australia yet. There's equivalent laws in California, I discovered. One person went to jail for half a day. So I don't know, whether practically these laws are going to be relied upon, but they do exist. So certain protections like the right to silence and so forth do exist for executives that could be involved in deliberate misclassification. Not suggesting any of that is occurring, but it's a messy area, and if nothing else, investigation by Fair Work Ombudsman can occur. And if that then detects there's underpayment under awards, John, as you were saying, non-payment of penalty rates, overtime, we're dealing with a lot of Fair Work non-compliance investigations at the moment, and it's not a pleasant thing to get involved in. Um, John,
Mm.
if I could move on to redundancies and the topic of letting employees go, what's the key thing that everybody needs to know about the tax consequences of a termination by redundancy?
Mm. The most important thing that people need to know is that wherever an amount of money is paid to a departing employee that has some connection to the termination, it's probably, at least prima facie, what's called an employment termination payment. And those payments are taxed at a different rate to normal salary and wages, and there's an obligation to withhold from them. And there's also a great danger that people will just assume that because something isn't explicitly connected to the termination of employment, that it isn't an employment termination payment or an ETP. For example, somebody who's leaving a business might have, you know, a contractual notice period, and there may also be a settlement in respect of, something that's gone on that seems to be unconnected to the termination. And what the legal position is that there only needs to be a very small relationship between the termination and the payment of money for the money to be an ETP. So you do see this potential for businesses to not realise they're paying an employment termination payment, even when they are.
But what's the practical consequence of an ETP? There's less tax deducted from the amount paid, or?
Well, for people who aren't of retirement age, an ETP is taxed at a flat rate of 32% up to, I think it's a cap of, I think, something like $270,000. And then after that, it's taxed at the top rate. So, yes, there is a different rate of withholding and a different rate of tax. And there is potential there to get it wrong. And in particular, there is potential when employment ends in controversial circumstances for the employee and the employer to enter into a settlement deed, thinking that the payment of money has one set of financial consequences when it really doesn't. For example, if somebody has said that they've suffered from a personal injury as a result of the termination, that personal injury amount might be tax free, but if you're not aware of what the requirements are, the personal injury amount could be taxed as an ETP. So an amount that people assume is tax free, in fact, it's not, because there isn't this awareness of how expansive the concept of an ETP is.
Yeah, that's an interesting one. I mean, we certainly get asked by plaintiff lawyers to settle claims on the basis of pain and suffering and damages, but there's no evidence that the person has suffered anything at all, really. Like the employment's been terminated for misconduct, and I guess the desire is to get the person as much money in their hands as possible. Sort of related to what you're saying, are there concerns about employers perhaps entering into deeds of release with lump sum payments that are deemed, quote, compensation for pain and suffering without supporting evidence of that pain and suffering? Like, what would you suggest should accompany a settlement that is on those terms?
Mm. The the case law on this does say that the words in a settlement deed need to be capable of being tested against real world evidence. So in any circumstance where I saw a departing employee being paid an amount of money for personal injury, but the um, the employer has received no evidence that this is the case, I would be I would be very cautious about telling the employer that that payment is not an ETP.
Mm.
Um, uh, yeah, I would always insist on seeing at least some evidence that the employee who's departing has some sort of an injury. Also, um, it actually needs to be described in the deed as a personal injury.
Yeah.
Um, Pain and suffering, I mean, that can just be emotional hurt. And there have been some very sobering cases where settlement deeds have worded these departure payments sort of loosely as being for pain or for hurt or whatever, when really they need to be worded as payments in respect of personal injury,
Mm.
and that has caused the the tax exemption to not be available. So
Yeah, good
um,
tip.
that is actually a big one because there is a lot of imprecision in the deeds of release that are concluded when employees leave.
Yeah. And look, there's a lot of pressure in those negotiations to certainly pressure from plaintiff lawyers to wrap these things up quickly, pressure from mediators to close the deal. Um, and often, matters are concluded, but those deeds that are signed and issues arise later almost always relate to the taxation aspects of the settlement sum. So, some great tips there to get proper advice around all of that. Now, what about genuine redundancy payments? What's the advantage of a genuine redundancy, and when is it appropriate to use that
Sure.
terminology?
Well, as I said earlier, it's very easy for any payment to a departing employee to be an ETP. But there is a carve out from the sort of ambit of ETPs for what are called genuine redundancy payments. The the basic precondition to a genuine redundancy payment is redundancy, and that has a technical meaning. It means that the job that the employee was doing just no longer exists. So a redundancy payment isn't available where an employee has been sacked because they're not up to the job or because they've done something wrong. The job or the sort of line of work needs to no longer exist because it's only in that circumstance that it will be a redundancy. Now, once you get past that gateway and you're able to call a payment to the departing employee a genuine redundancy payment, it does have an advantage because it results in a larger amount of money in the departing employee's pocket. The uh, the effect is that a part of the payment is free from tax. I think in the current financial year, it's just over $13,000 at the minimum that is tax free, that's paid to the employee. And the longer the employee has been with the business, the uh, the bigger the genuine redundancy payment can be. For every year of that the person has been employed, it gets bigger and bigger by amounts of sort of $6,000 or $7,000 or more, depending on the number of years and which years that they've been employed. And if somebody's been with a business for a decade or so, that can work out as really quite a large um, financial advantage to the employee. And if a business is keen to restructure its workforce, sorry, not its workface, its workforce, then it's useful to know that employees who've been there for a long time are eligible for really quite large genuine redundancy concessions, and that can be a, very good basis for running, for example, a voluntary redundancy program.
Mm. So what about if there's a genuine redundancy negotiated, um, perhaps it's reflected in a deed of release, perhaps it's not, but then the employer replaces that position almost completely after the departure. Is that a risk for employers that the ATO will look at that payment and investigate whether or not that should have been characterized as a genuine redundancy if the position was essentially replaced? Or am I thinking that this is way too binary and the ATO is not spending its time looking at those sorts of things?
Mm. If the person who leaves um, is very rapidly replaced, then that does immediately raise a question about whether or not it was a genuine redundancy, in the sense that the work no longer needed to be performed. So, um, so that does create a level of risk. It's hard to know at any particular point in time what the ATO is focusing on.
Mm,
Uh, Certainly, if the genuine redundancy payment was being paid to a worker who'd only been there a year, and so it was a tax-free amount of only $13,000, it's unlikely that the ATO would be, sort of forming a special task force to investigate.
yeah.
So, as always in tax, sort of as the amounts of money get bigger, your level of risk management needs to become more acute.
Mm,
And if it was a long-term employee, and so the amount of the genu genuine redundancy payment was in the sort of 60s or 70,000s, you'd be assuming much greater risk than if it was an employee who'd only been there for 1 year.
mm. Okay. So before we move on to FBT, what is excluded from being an ETP?
Mm. The really big exclusion, and you probably would have seen this in your own dealings with the aforementioned plaintiff law firms, is payments in respect of personal injury.
Yep.
I've advised probably on hundreds of workplace settlements, and a large majority of them do feature in some way, shape, or form an allegation of a psychiatric injury. Call it PTSD or adjustment disorder or um, something else. Depression, of course, is another big one.
Yep.
And uh, so, where an amount is paid in respect of personal injury, it's completely tax-free. You identified earlier that it's very important that employers not just blithely assume that the employee has a personal injury, and that the money paid to the employee is tax-free for that reason. At least some level of attention needs to be given to how severe the personal injury is and whether or not the amount being paid to the employee bears a sensible relationship to it. I mean,
Mm,
if the employee has a doctor's certificate that says they're off work for 2 weeks, but for whatever reason, the employer is paying quite a large amount of money to the departing employee. And as we both know, there can be all sorts of reasons why they might want to do that. Um, it's You're in dangerous territory where you're paying hundreds of thousands of dollars to an
yeah.
employee who was off sick for 2 weeks.
Yeah.
So personal injury is a very big exclusion, and it's also a very important one for everybody to be aware of. The only other thing that uh, I I think it's very important to know is that if a payment or part of a payment is made to a departing employee more than 12 months after they've left the business, um, the um, the amount is still taxed, but um, the ETP concessions are no longer available. So, somewhat alarmingly, perhaps, if an amount is paid to an employee more than 12 months after they leave, the entire amount, if it would have been an ETP during that 12-month period that has gone before, will be taxed at the top rate. Um, so rather than at graduated amounts. So,
Yeah.
mm,
Yeah, interesting. And that just makes me think too, and we may not even have time to talk about this, but something that I think is sometimes missed too is the golden handshake limitations on caps on what can be paid to senior executive settlements, I think, in um, publicly listed companies.
Yes,
I don't remember what the cap is now, but that's something I guess for some of our listeners to be aware of.
it certainly is. And uh, that is often a feature of of settlements with what you'd call high net worth individuals.
Mm,
They um, they get this big payout, but the company then finds that it needs to make disclosure um, uh, to various people of what was meant to be a top secret settlement.
yeah.
So um, the I've that is certainly becoming more and more of a problem, um, particularly as the rich get richer.
Yes, exactly.
Mm.
Um, Great. Okay. So now this is a good one, actually, fringe benefit tax. And there's a lot of misconceptions or misunderstandings around this, but a lot of our listeners in HR administer salary packaging arrangements without really knowing that much about fringe benefit tax and how it applies. Can you give us a bit of an overview of that issue?
Yeah, of course. Um, as we know, Paul, the 1980s was a great decade for many people,
Mm,
um, but it was also the decade where the government realised and took steps to prevent um, well-off people from receiving the majority of their remuneration in forms other than cash. So things like the company car, laptops, club memberships, all started to be liable for tax, specifically fringe benefits tax. And the thing about fringe benefits tax is it has to be paid by the employer that's conferring all these benefits. So the employer has the responsibility not only to figure out whether or not something is a fringe benefit, and almost anything that doesn't take the form of cash that's provided to an employee can be a fringe benefit. And then, if it does have that character of a fringe benefit, after you've performed that analysis, you then need to value the uh, the fringe benefit for the purpose of paying tax on it. So, um, you know, they often lead to considerable compliance costs, the provision of these benefits, and certainly a lot of businesses have long since drawn the conclusion that fringe benefits are more trouble than they're worth, and so they tend to shy away from them. And certainly, every time I look at the Fringe Benefits Tax Assessment Act, I I'm not left with a strong desire to revisit that legislation again anytime soon. It's complex stuff, some of it. Mm.
yeah. Um, so, I mean, you might have explained this, but it applies to company cars, work computers, novated leases, things like that. Um, how does FBT apply to each of those benefits?
Sure. Well, in the case of the company car, as soon as there is a degree of personal use, there's a possibility that that the car in its entirety is a fringe benefit. The ATO guidance says that it, if the car is driven home by the employee, that is, if it's not left at the workplace, then that is in itself one test that can cause the car to become a fringe benefit. Now, there are exclusions within there. A vehicle, I should say, will not be a fringe benefit if it's a lorry or a pickup truck or something that a top executive is unlikely to want parked in their garage. And there are also concessions. There are concessions for cars that are provided to employees if they're electric vehicles, for example. Um, so, as I said, company cars, as anybody who's looked into it would be able to tell you, is quite a good example of the complexity of FBT and the reason why increasingly businesses just don't bother with it.
Mm. Yeah. No, understand. Um, okay, so let's move on to this is another good one where there's not a lot of understanding. Employee share schemes. Um, so, John, what are they? How's tax imposed on them, and what are the advantages in having an employee share scheme for a company?
Mm. Employee share schemes are very popular these days, although I don't think it's tax driven for the most part. Um, it's mainly the popularity of these schemes is mainly driven by um, business considerations about aligning employees' motivations with that of the business, that sort of thing. And in that sense, it's quite legitimate. But in an employee share scheme, the employees are often given shares in the company or options to acquire shares, uh, either at no cost to the employee or at a cost that is less than the market value of the shares. So in that scenario, there will be an economic gain for the employee immediately upon the issue of the shares, and the um, the basic structure of the taxing provisions seeks to identify that gain based on the amount that the employee does not have to pay of the market value of the shares, and that is the gain, and it's then taxed. Sometimes it is taxed in the year that the shares are actually issued to the employee, um, and that will usually, I'm speaking roughly here, that'll usually happen if the shares are in a company that's pretty safe and likely to be around for a while. If, however, the company is more of a speculative venture, if it's a startup or something like that, then the tax is only imposed at the point where the employee sells the shares, because it's only at that point that one can be sure that um, that the shares in the company have any value. So, um, an interesting feature of the taxation of employee share schemes is that the employee gets shares, so gets something that is not cash. And under the terms of the employee share scheme, the employee sometimes isn't able to sell those shares for quite a while. But it is possible for the employee to be liable to pay out money in the form of tax in the actual year that the shares are issued. So that is definitely something that business would want to take into consideration, because there's potential for there to be some quite unhappy employees if they find that they're paying tax on this non-cash asset they can't realize for quite a while.
Yeah.
Um, there are also some interesting concessions that apply to employee share schemes. Uh, for example, startups, any gains on shares in a startup um, are concessionally taxed. So perhaps as distinct from fringe benefits tax, I wouldn't be dissuading businesses from setting up employee share schemes as I perhaps would in the case of FBT.
Yeah, and look, I sometimes see employment contracts that have pretty confused looking clauses in them around employee share schemes. In your experience, are these the rights and obligations relating to employee share schemes usually contained in separate commercial agreements, or is it something that should be set out in an employment contract?
Mm. Um, I've usually seen employee share schemes um, in separate agreements. There will be there'll usually be a reference in the contract of employment to the employee share scheme and to the employee's right to participate in it. But because but share schemes often change over time, and so they'll often be in a separate document. And I mean, the fact that it's in a separate document isn't the end of the world. It's uh, the document can be examined and interpreted and uh, and all the rest. And while they can be confusing, I wouldn't say they're prohibitively confusing. Uh,
Mm,
I think the risk here is that employees will just say, "Oh, great, I get free shares," and agree to participate in the scheme without necessarily doing the work of reading the fine print.
mm.
So uh, I'd suggest it's important for an employee not to just agree to participate in a share scheme as a matter of course, and yes, to have a look at the fine print at the point where they do agree to participate.
Yeah. And look, our corporate, not me, but our corporate and our tax team draft employee share schemes. If anyone's listening and thinking they want to get one properly drafted, we do have people that do that. So our final topic, again, another interesting one, payroll tax, something that often lurks in the background with our HR listeners. Should HR managers be paying more attention to payroll tax? And if so, why and how does it work?
Mm. I think there are definitely some HR managers who should be paying more attention to it. It sort of goes back to what I mentioned earlier about how when the amounts of money get bigger, your your level of risk management and your level of diligent attention to an issue needs to increase. Um, Payroll tax is a tax that a company has to pay when its workforce is large enough that it's paying, sort of around $1 million in wages and salaries every year. But the reason I'm imprecise about the size of the number is because there is different payroll tax in each Australian state.
Mm,
So it is a tax that only starts to become a problem as your business gets larger. So that's certainly one indication that an HR manager needs to be giving more attention to it. Another indication that the HR manager needs to be giving more attention to it is if a business uses a large amount of workers who are arguably independent contractors, and there are certainly businesses like that. There are also businesses that depend very strongly on that characterization. So um, once it's apparent to a business that payroll taxes are a concern, the sort of things that the business needs to be looking at are, firstly, are there any fringe benefits that are being provided to the workers? Because payroll tax is payable on non-cash benefits as well as just payments of money. Another thing to look at is whether or not the business is connected by cross shareholdings or by management or by various other ties to a separate business. And the reason for that is something called the grouping provisions. I said earlier that when a business only has to pay payroll after it has a workforce of more than $1 million a year or thereabouts. There have been practices in the past where businesses have sort of separated out its operations into different companies in order to stay below the threshold. And so there are what are called grouping provisions that allow separate companies' employees to all be aggregated for the purpose of calculating whether or not the payroll threshold is reached and whether or not and how much tax needs to be paid. So it's possible for a business to be over here and another business to be over there, and without management or HR necessarily knowing it, for those two businesses to be treated as one for the purpose of payroll tax. So that's a danger right there. So
yes.
as with most areas of tax, um, it's the tax problems start to multiply as you get richer, Paul. Only rich
Yeah.
people have tax problems, the saying
Yeah.
goes.
So I've heard. Um, so What about, so payroll tax seems to be particularly controversial in my experience with in industries such as dentists and doctors. And there's a bit of case law on this, but I can't immediately identify the very specific issue. Is this something to do with the distinction in those industries between employee versus contractor and essentially, a dentist or a doctor's sort of traditionally considered like a contractor, but they're pretty much performing the same services within a surgery all day, every day. Is that somehow interfacing with the payroll tax issue?
Mm. Um, the reason why payroll tax is controversial in areas involving doctors and dentists and similar professionals is that um, those sort of professionals, white collar professionals, were traditionally regarded as independent operators, independent
Yeah.
contractors, in fact, who are running their own business. But as time has gone on, we increasingly see things like chains of healthcare providers, and we increasingly see doctors, dentists, and the like in roles that increasingly resemble the roles and working conditions of employees, and having increasingly small amounts of control over what they do. So, because there are large numbers of professional people who are increasingly in employee type roles, we see this issue where the government revenue agencies are looking at the amounts of money that these white collar professionals receive, and uh, and taking the view that they are employees, and so the money they receive does give rise to payroll tax. It's probably, I mean, I think it's also true that there's also been quite a few examples of structured payroll tax minimization in certain areas, and that has excited the interest of agencies as well. And if you look at the law reports, there have been some pretty exotic structures put in place by some, only some, doctors and dentist surgeries in order to avoid payroll tax. Some
Mm.
of them are very 1970s in their sort of blatancy, but yes, they are there. Mm.
I'm also thinking about, again, separate topic, but income splitting, for high net individuals in various professions, um, where family trusts are used to minimize tax. This is another area I understand the ATO has been monitoring for quite some time. And there's the current Albanese government's looking at making that even harder. Um, I guess I'm thinking, and probably listeners are thinking, like, are there any areas where you can get away with anything anymore in minimizing tax, or is the ATO onto like literally everything?
Mm. Um, I think I would say that there is still potential for clever tax management. There is definitely still potential for income splitting. And I don't think we're going to see the death of the family trust anytime soon.
Hmm.
Um, the rider to that, however, and it's a very important um, rider, is that you do need to, when you're contemplating these sort of arrangements, know what the ATO does accept and what they do not accept. There's a huge amount of guidance to those sort of issues available, on the internet and from professional advisors. And it is extremely foolish to venture into any sort of a tax management structure without having an awareness of what attitude the ATO will take to it if they look at it.
Hmm.
The danger here is that people can put a structure in place and can ostensibly reap tax benefits from it for years and years and years. until the tax office actually looks at it and decides whether or not they're going to accept it as effective. And um, when that happens, there is potential for literally years of tax to become owing quite quickly, and also for interest on that unpaid tax to become owing quite quickly.
Mm.
So uh, one does need to be cautious when one enters into these sort of arrangements. But it's definitely true that uh, things like income splitting are still with us.
Mm. Well, very fascinating, John. Very interesting conversation. If you had one takeaway tip for our listeners around all of these topics, what would it be?
Well, probably to call you, Paul, and your colleagues at Dentons. I hear only good things about your firm, but probably the second bit of advice that I would give to anybody who's dealing with tax issues is uh, be smart, but don't get greedy. Because
Mm,
that bit of advice that we always give the younger generations, that if something sounds too good to be true, it probably
mm.
is one that retains its validity.
Yeah, good advice. And I didn't tell John to say that, by the way, but what I was going to say is have a good lawyer, have a good accountant, because I think we see, sadly, we see sometimes some very successful startup companies with some great ideas, and then business booms, and then they run into some problems in some of these areas that we've discussed, and sometimes they don't continue operating because of they've got caught up in the red tape and they've not got proper legal taxation, accounting advice from the beginning. So, John, you've touched on a lot of the grey areas in what we employment lawyers are sometimes asked, um, that sometimes the accountants don't give information on, but which might otherwise sometimes go to our internal tax team as well. So, if our listeners and viewers want to further information about your expertise, John, I know you write papers, you speak at conferences. Where's the best forum to go to find out more about you?
Mm. Well, uh, a lot of my material is available through the internet, and my articles are generally available through publications put out by the Tax Institute of Australia. Um, and yeah, if you want to speak to me, uh, I can be located pretty easily on the internet. There aren't many people out there with the surname Hyde Page.
Yeah, so that's hyphenated, John Hyde Page. Is that
It's two words, but there's no hyphen.
oh, okay?
Um,
I like it. It's a good name. And you're on LinkedIn as well?
oh yes, um, yes,
Great.
all the usual platforms.
Yep. Well, do follow John on LinkedIn if you would like to see what he posts. Do follow me on LinkedIn too if you don't already. I write very frequently for The Age, the Sydney Morning Herald, the AFR, on lots of topical workplace topics. Um, and thanks for listening. And we look forward to chatting to you about another topic soon. Have a great week. Thanks, everybody.
It's been a pleasure.